Good evening, guys. This is Ken at Tortoise Capital with the nightly strategy podcast for uh, July 10th, 2020. Thank you for your patience. What a week this has been. So, I was getting a lot of work done today, and so as a result, the morning trading session I reverted to like the 30-minute time frame. And the technique that I've been playing with, I like so much that we're going to call it kata number 2. And you're really going to like this one. So let me just demo those right now. So this is Cleveland Cliffs. I'm going to give you the narrative of this, and then I'll give you the rule set. That's also posted in the chat room. So the first thing that I did was I took a set of symbols that were all in critical states and are all frog champions, and had all like either sold off really hard and were in an abnormal oversold condition, or were really excellent like ERY, which is that triple inverse energy sector, which we crushed yesterday. And so that was extremely overbought. So these are already frog champions, meaning they trend intraday really well, and they trend nicely as swing trades, and they're at an extreme of overbought or oversold as well. So there's an extra reason to love them. So the first thing I do is I go to in Cliff's Natural Resources, and I find the I'm going to draw this little yellow box that comprises the PSAR flip. I should be able to see this. Oof. Yeah. I drew it bigger than I had to. All right. So that yellow box right there is, I'm going to go to that second one back. So we've been playing with that idea of like that trailing stop from the PSAR -1, so we're going to have a PSAR flip that happens from here to here, right? And so that would make this dot the PSAR -1, all right? So if I had oops, you could see my PSAR dot here, just to make that a little easier to see. So you can see the PSAR has been declining all the way to here, and then right at the close of the day in the last couple minutes, it flipped. So that let me draw the PSAR box, this PSAR flip box. Yeah. From the dot -1 to the flip. So I made that the PSAR. So then what I did was I took that box and I went over to because I'm thinking this is going to reverse or it's going to fail, right? I basically do a straddle on the open, and that's going to be my minimum manageable risk box for use in the hybrid frog the next morning. Now I'm really hoping that it's going to do what I want it to do, and that is reverse and go north. But that's what that. So that's where the information from the day before comes from. So it opens here, and it travels straight up one box, and now I'm in. Now what I noticed was, if I had drawn, let's say, the entry, that trailing entry, I might have been, I mean, conceivably I could have gotten an entry here. If it had, in that case, it would have moved like one box off the bottom, and that there's that entry. But I didn't do that because I hadn't played with this that much yet. So I just took that entry there. In either case, whether you're taking that first entry or that second entry, I'm still using that, that minimum manageable risk box kind of as the directional signal for me, that it moved enough in one direction that I was willing to just give it a shot. I still went ahead and used the wider stop. I used since I entered on this bar here, I went ahead and used that the PSAR dot. Come on, screen. Where are you at? So there's my little PSAR dot that I'm using as as my initial risk. And as it turns out, this thing, now I'm going to just use the Wu Wei exit strategy. So in this second bar, you'll notice that right from that opening move, and then my entry, I took this entry here, it moved up, closed, open, sold off, finished strong, open, and then just kept going. By this time on the yellow dot, I'm already thinking, well, I should be putting a second position on this thing. So that's a place that you could do that. That's a 1, 2, 3 entry. And you'll notice that thing has already moved, at least one execution risk box off the bottom. So now I get 3 execution risks in, and all I've done on this one, because I'm on, I want you to notice that I am on 30-minute charts here. That also matters. 30-minute chart. So this is, that second, or that move to no lose is really after an hour. And that's really a deliberate move. And because it's not so, tactical, every minute is a move. I'm just, I'm using the northern skin of the dragon instead of the Bollinger Band mean, because you'll note on the 30-minute chart, that Bollinger Band mean would be way over here. So that's not even good enough. So I'm still using the Wu Wei, but in this case, what felt correct to me was I chose the skin of the dragon that was closest. I wouldn't be offended if you were using the spine of the dragon, or if you were somehow using, the southern skin, which is right there. But on this one, at position 4, when I'm at no lose plus dinner for 2, and I'm already, and this thing is already moving out, it's moving up the stack. By the time this thing has moved up to here, The skin of the dragon already feels correct. An hour later, this thing is still working and growing, and it's crossing the Z2 line. So I would think about adding another position there. This one was an excursion beyond the doji. So when that thing's in a doji status, a stop right there feels okay because I've locked in two. If it had sold off much more, I could snipe this and just take it all, or take half here and then take half if it comes down and hits my manager. But instead, this thing took off, so this would be an interesting place to add a fourth position. And that's almost like that, like a universal entry. It opens inside the previous bar, and then without making a new low, it just keeps going. On a 30-minute bar, that's a really strong signal. Really strong signal. So by this time into the trade, at 5, what I notice is that this thing has made 3 efforts where it couldn't get any higher, and this one actually was a slightly lower high. So that looks like the alert for a sniper. So since it still had recovered and was outside the Z2, I just moved my stop from 5 to 6 to respect. I went back to the 2-bar low and did that. Then when this closed and then opened, sold off, and then started going higher, that's when I moved that stop up to 7 and did the 1-bar low. And then as this thing was closing, I just said, let me go ahead and lock in half of that bar. So I was at 8. So that's at 560. This thing ends up going up to like 575 without ever touching any of those stops on 4 positions. So that felt pretty amazing. And I was just writing like a maniac, getting things done. And Cliff was just working. Well, that wasn't the only thing that was working. U.S. Steel in the whole materials metal sector. So Alcoa did good. Nucor did good. XLB did good. SLX, the steel ETF, did well. So all of those things had been crushed yesterday and the 3 or 4 previous days. They were all at critical states and exceptionally oversold. And XLB and Energy both had been smashed. So here it is again. I draw the box between the PSAR flips to get the sizing of it. Then I put that as a straddle on the open. It moves to the upside. And off we go. Here's my Wu Wei stop here. At the PSAR dot. In that second bar, so again, this is on 30 minutes. On that second bar, I go ahead and move my stop to no lose plus dinner for 2. So this thing is already well up the stack. Should probably use yellow. That shows up better. So this, by the time this thing opens here, sells off. And as it's moving up and makes the new high in here, and you notice spring now turns to summer. So when that price is up here and getting ready to close well, that's when I move from 3 to 4. And then again, I just pick up my plan at that moment is to just use the northern skin of the dragon, and all that does is just go up. Where could you consider, new, more entries? That's actually not a bad one right there. Here, maybe here. Those are all reasonable places. And then there's really no reason to ever adjust your managerial stop from 4 to 5 to 6. That thing's just working. And you just notice You know, that one is almost the if I read that right, whoops, that's going to be like the baby dragon, I think. Oh no, there's the baby dragon. So this is just halfway between, yeah, Z1 and Z2, and that's what the northern skin of the dragon is splitting the difference between. It's like a Z1.5 in that sense. So if you wanted to, you could also put a little dotted line in there for the Bollinger Band Z1.5 if you want. That's maybe not a bad idea. But that one paid off huge. So this one's a little trickier. This is ERY. And that's that triple inverse energy sector. And so this vertical blue line is the close and then the open. So it closed here, and then it's going to open up in here, and then this is where I'm going to end up taking a sniper exit on the swing trade, because that one was like a 30R win yesterday. So when I keep 10% of that, that means I got like a 3 scoop position on this thing. So I really don't want to risk too much of that. I mean, if it keeps going, I'm happy, but this thing opened at 60, and in the first half hour sold off to 56.5. So it's probably about 5% sell off in the first bar. So knowing that that's possible, the sniper exit feels correct. So what I did was, now on this one, you'll notice there was not a PSAR flip available. So the box that I drew was from the PSAR dot to the top of the RL10. And unless there's a big gap, that's where that PSAR dot would go when it flips. But because, that doesn't happen intraday because there's no gap between bars. Where they close is where they open. But here's one where there was a large gap induced. And so when it PSAR flipped, it was higher where that PSAR flip occurred, was higher than where that RL10 was. So I just drew my box from the close, because you can set this up the night before. Everything's set up the night before. So that's from the hump of the RL10 here at 2, and the PSAR dot right here. So that's the size of my MMRB. So that's like a $1.25. $1.25. So the next morning, it gaps up $1 from 59 to 60 and opens at 3, and then starts selling off. And so when it sells off 50 cents, that already feels like it's going to come down and close the gap. So I just take a sniper exit on the entire swing position. And now, if I was a better man, I would have had a hybrid frog on that on the 1 minute charts. That actually was pretty straightforward. But I was kind of committed to the 30-minute chart here. So when it failed a full box, now it's closed the gap and is failing further, I go ahead and put the entry in here, and I'm drawing the I just take my stop here from where it closed yesterday. I'm just going to take that stop. Like, that's the MMRB for a 1 execution risk, but I'm not going to let it go higher than this. So I wouldn't be offended if you treated, the orange box, now let me call it the orange box, as how far the red box. Let me hit the orange. So the orange box is how far it had to fall to signal to me to enter, but my execution stop was just going to be there, and even that was pretty good, you know, because that's like 50 cents, so that ain't bad. On the after a full box of a move, this thing is failing out of the dragon. Now what I have is and a PSAR violation. Notice the PSAR violation. That feels like a supported fall crossing to the downside. And so I put the second position on, and then I just move my stop from 4 to 5. And now what I decide to do is pick up, whoops. I decide to pick up the northern skin of the dragon. I think you could also go here and pick the southern skin of the dragon. This one just felt better, and the slope of the dragon, or the spine of the dragon, isn't bad. In any case, if you take the southern skin of the dragon, you get out sooner. That probably was a better play. If you take the spine of the dragon, you end up getting out here. And then the northern skin of the dragon ended up getting the best exit, but you couldn't know that, but you're also in that trade longer. And that goes all the way to like the end of the day. So that's why in the write-up for this thing, I'm saying, in the moment when you accelerate or you strike stop and you move to wherever you're going to move it to, just pick one that feels appropriate and just stay with it. And there's nothing wrong with, like, if I had said, hey, let me start off with the northern skin of the dragon, and then here drop it down, and then pick up the spine. You could, on a 30-minute chart, you can actually study that and make some decisions. So you have flexibility, and this will help with the span of control. So I would ask you, am I really, really slow day trading right now, or am I very fast swing trading? It doesn't matter. Call it your hybrid trading. That's what you're doing. So this was a getting two positions in on that one, and then right after I took the exit, I went ahead and when it broke down out of the dragon again at 7, I went ahead and initiated another. I went down to the 1 minute and was able to get some gains in the last 45 minutes. But on that one, I used 1 minute charts, so I'm not counting that as like this technique. So that's the patterns. I like that so much because you can do all of that the day before. That I wrote up this kata for it. So let's see. Oops, that's the wrong one. Sorry. Trying to find some. Yeah, there we go. We'll make that the flashcard. So using 30-minute charts, the target selection is from your herd. So you're studying those, however many symbols are in your. So I look at about probably 30 or 40, and I just look at those extremes of the, the gains and the losses. So when I do this when I'm doing the doing this version, and I'm going through the I'm looking for themes and for outperformance. Like Monday, Cliff, Tesla, U.S. Steel, Alcoa were all exceptional big winners. Down on the bottom, there's Nikola Motors, the VIX, Virgin Galactic, Twitter were the big sell-offs today. So I'll be using those for target selection. So when I say for target selection from your herd, find the most extreme movers that are also either extremely overbought or oversold on the NDX 10, because I'm really trying to leverage the swing trading one day at a time. If it was oversold or overbought also on the 3-day as confirmatory, that's good too. But really, it's the NDX 10 I'm using to govern this. Establish the PSAR flip box, the PFB, because I want to distinguish that from the minimum manageable risk box. It has a lot of those qualities. It could be a candidate for it, but I really want to emphasize the technique that I was using there, like in box number 1, was that I was using the width or the height of the from the PSAR to the PSAR. In this case, I went back. I'm thinking that second dot back is probably a better way to do it, because that gives you now a way to start framing this. It just so happened that actually worked because it opened in an orderly fashion. But if there's a big gap, that's probably not available. Like we wouldn't see that same kind of opportunity on the ERY trade. But because this was an orderly opening, that now becomes a possibility. So you could actually even draw those lines on your chart. So this gave me an orderly open and all that stuff. So establish the PSAR flip box, PFB from the previous day, computed as the distance between the PSAR dots on the most recent flip. Bracket the opening with that PFB in either direction. So you can see that. Come on, Kenneth. So just for clarity, I'm not showing that one, but so that's what you got. So I bracketed the opening, then I go in the direction of the breakout. So that's using the technique of the hybrid frog in that sense, right? With an I stop at the current PSAR or the RL10 max excursion, whatever makes the most sense. In this case, it just made sense that the PSAR dot felt proper. It was even further than the PFB, but I was willing to. I actually don't mind this higher opening because it really clears all of this crap in the last couple hours of the previous day. Then I apply the Wu Wei exit management process using that should read the chosen skin of the dragon, whichever I'm using, the upper skin, the spine, or the bottom skin, as the manager stop rather than the Bollinger Band mean, because the 30-period Bollinger Band mean reacts pretty slowly. Do not carry a full position overnight. So in this case, when it really closed well, I just went cash on it. But if this was like not a Friday, I might have kept 1/5 of that position as a swing trade, in the same way that I carried 1/5 of the ERY day trade as a swing trade. And that way I'm doing the kind of like a core and turbo approach. Then if this trade is successful like this one was, and I would say probably three gain boxes is probably pretty good. Plan for a continuation tomorrow, and then just use the same position size and that PFB, or you could elect to adjust that box based on whatever the new PSAR dots are. But once you kind of get used to that level, like you may not see a pinch in here because this was all directional. So this one formed because there had been a closing pinch. That's actually a really good sign. I think that's what you want. But this would probably still be a good box for tomorrow. So let's just pretend that that's where it closed. I would already be thinking like, putting my box like this, my two boxes here. And then if it opened without a gap, then whichever way it went, that's the way I would go. If it went out of the northern box, I'd be getting a continuation. If it fell out of the southern box, then it would be a reversion, and I'd probably be looking for that 50% retracement or back to the Bollinger Band mean, which would be down here around $5.20. So there's a good move available. Okay. So that's kata number 2. And the beauty of that thing is, I think you could pick from the daily report anything that really looked attractive, like the daily squeezes would be nice. The max pain range compression and the auto framers, or if you're doing a speed run on your own things, you could pick a couple symbols that really look good. And I would start with the ones that had this long sideways movement, so you could see that where it had a PSAR flip near the end of the day. That's sort of the end of one trend, and it's kind of neutral going into the close. And then it's poised, ready to break large in either direction. So that kata would be, easily prepared, and it gives you on the 30-minute bars, it gives you plenty of time to be able to work to find the mover, if you will. And in fact, you could even if you just figured out what that PFB was, and you just doubled it, you could have that pre-drawn the night before, and then just over here ready to drop it. As soon as it opens, bam, you just drop it on there and ready to go. Or you could draw 2 boxes. But the ability to completely prep your trading plan like that is pretty powerful. I think you're going to like that. Especially if you're a swing trader and you're looking to add a little bit of turbo to your swing trading, since you're probably looking at your swing trade positions every night with end-of-day data. When you see something that has compressed like into a doji after a nice move, and it's in a critical state as we would define it, or any of the symbols that fire on a swing trade basis, well, you've already kind of been accustomed to doing this with the mechanical wrist box. Now you could drill down a little deeper and get an even closer look into what's going on. Now you can take the excursion from the PSAR flip box and not even have to wait for the mechanical entry. Or you could even take a half a swing position with this if it opens in the yellow zone, and then when it goes up through the mechanical entry and takes out the previous day's entry, put the second position on, and you will have an improved entry. God, that's so good. That's its own workshop right there. Holy mackerel. I don't know if you guys know how good that is, but that is good. Well, on this one, yeah, I would. On this one, you see the PSAR flip actually occurred the day before, so that dot had already flipped, and there were 2 dots to the downside already on the day before. So I was able to measure that box pretty easily. So I also am going to know where the PSAR dot is going to be the next day. That's already there, right? So I'm not sure if I answered your question, Joe. So yeah. So I think you're really going to like that kata. I would. Those are uploaded in Patreon and on in the campfire chat room. So I would study those three trades pretty closely. I think you're going to find that's very attractive. One of the things it'll help you with is the on some of these days where like DIA and EWZ were in that kind of really tight trading range and was just chopping around. They weren't the ones that moved, but these things on the extremes really moved. This one gives you the ability to pick and choose your symbols, whereas Kata 1 locks you into DIA and EWZ for good reasons. So I wanted to just share that with you before we got too much further into this. I don't know if I covered this one. Oh, I didn't even cover this one. So now let me get the, wanted to show you this one on XLF because this had some other, this illustrates some interesting points about the kata for you to study. And when you have 30 minutes to study, you study. So that's what you do. So again, so I'm now looking at XLF. So F and E, finance and energy, were not so good yesterday. And you should see J.P. Morgan and who was the other? And Goldman Sachs today were just smashing it out of the park. The whole finance sector acted the way the finance sector would when it's oversold, and they're playing catch up. So in this case, the PSAR flip hadn't occurred until the next day. So this one closed, and so what I've got is these last two PSAR dots circled. And what I did on this one was I drew my line from the PSAR dot -1 just as a reference point. And then what I did was I drew my box from the closing PSAR dot down here to the to the RL10 excursion. And because it was an orderly open the next day, that's where the PSAR dot flipped to. So the size of this box was correct. So it opened down here at the low. I should draw an arrow, excuse me. So it opened here, and here's where it moves one of these PSAR flip boxes, the PFB. It moved from the open up that high, and so that would be the entry. And then I picked the PSAR dot because I'm using the Wu Wei exit. So what I did as to just speculate with this thing was because it opened in an orderly way and then just started going straight up. I had drawn that line for references, and let me just try that, see what that's like. And because the PSAR dot hadn't flipped yet, this is exactly the story problem that we've been working on these past couple of weeks. So is Worth on tonight? Yeah. So Worth is on. So this is exactly the condition that I was talking about, and it makes more sense now why this is a good thing on 30-minute charts as opposed to 1-minute charts, because that can really run away from you, 1 or 2 bars later, and that's an hour or 90 minutes in. So I put half the position on here, with the PSAR dot. I put half a position on here when it had moved a PFB box off of the low. I would consider, being a 1 minute trader, an execution stop below the low of the day feels really natural for me. Like it would be unusual for me to let it fall all the way back to here on a 30-minute. So I draw that dotted red line as a way to consider the possibility of that being a stop. And then depending on it, like if you were on that first entry, then this is about how long you have to wait to move to no lose plus dinner for two, and then pick up the northern skin of the dragon, and then off you go. If you were working this second entry, then you don't make that move until it has come all the way back out here, and then off you go. You jump that stop either, and that would either be from here or from here. You jump that stop up here. You're well far away from those, and then you can just keep the northern skin of the dragon the whole way. Because you're on 30-minute charts, some things that I would consider is that instead of the pure Wu way, you might have, and because it's 30 minutes between dots, I would consider, instead of just keeping it here while it's still going up and up and up and up, I might have just, followed the PSAR dot and then spring and strike. Or like in this case, if it was here and it was going up, I might have just, like if I use this entry and had a stop down here, by this time I might have just picked up the southern skin of the dragon and then accelerated up to here and then take it up. So these dotted red lines all are things that I would consider doing. This is like choose your own adventure, choose your own path on the exit. So that's what I wanted to show on this one, if I could. And then I'll let you look at the, what the different, what the different moves and gains are. I should probably put this over here. Whoa, what in the world was that? Sorry about that. Yeah. And it just, there's something on the 30-minute chart after a really nice move that's moving along that baby, look how it's moving along the baby dragon, kind of guiding it north and staying in the land between Z1 and Z2. And the dragon feels like a nice adaptive stop that gives it a respectable amount of room. Yeah, Eugene, I think the earnings day is very interesting on that because you're going to see some of those big, large moves. So if you know what your MMRB was or that PFB was the day before, you can be ready for that kind of bracket at the entry and then a breakout move. And that's essentially the hybrid frog, only you're using a much smaller box. Like this big yellow box is only 30 cents. So if you took the first entry, you're getting in at about 22.80 and you're going to cash something 70 or 80 cents higher on a 30-cent risk. So that's a 3R, that's a relaxed 3R move. I mean, you're not even fighting the tape on that. And that unfolded for the entire day. So that's one of the ways that we might think about getting that steady, grinding, long haul train move. Okay. So that's that. All right, let's revert back to a regularly scheduled program because I wanted to make that into a separate standalone movie. I wanted to front load that so it makes it easier to, I can just process the first 45 minutes into that lesson. So that is kata number 2. We're going to call that supported spring crossing kata 1A, and then the ones that are variations of it, like the supported fall and the winter, because that's all off the same base pattern and 1 minute charts. That's going to be a family of moves. So that's going to be kata 1A, 1B, 1C. We'll, as we start thinking about how to build out the job book and the proficiencies. So I've been reading some stuff on instructional coaching. I gave you a little speech on that the other day about coaching teachers is what instructional coaching means. Teaching teachers or coaching teachers to be better. And then if you teach your students to be teachers and coaches, you get a real meta solution. Well, the same person who wrote a lot of the material on that also has one on what did she? It was a way to specification grading, and so her argument is that instead of trying to give people grades in college for the collection of all these different holistic things that are brought together, she recommends adopting sort of a contract learning approach where you are a go or no go at particular component tasks. So you have a very precise measuring instrument that says on this task you achieved the standard or you didn't. And it makes it very clear which skills that you have demonstrated mastery of. So it's a very nice approach. And what it forces you to do as a curriculum person or someone who's teaching the body of knowledge, it gets you into an analytical mindset and has you render down this complexity into specific task sets, which is where I believe we're heading with this kata approach. And so there's a nice theoretical basis for organizing our work in that way. So specifications grading is you'll probably see some of that language come in. And that, so the kata is either performed perfectly or it was not. And, when you go take your different belt tests, the sensei may say, hey, you performed the kata satisfactorily. Now here's a couple teaching points. It may not have been perfectly crisp like you would do at the black belt level, but when you're getting your yellow belt and green belt and so forth, it's within the expected performance parameters of that skill level. So that's a preview of coming distractions. Okay. So today, let's take a look at today. Get this out of the way. So yesterday, we finished the day. It was a large range day that came down and tested the Bollinger Band mean and bounced back up halfway. Came out of the dragon and closed, and was halfway to the Z1, halfway between Z0 and Z1, and closed above the skin of the dragon. So we said cautiously optimistic. So today it gapped almost nothing, sold off in the first half hour or so, and then just kind of powered north and north and north and north and finished pretty strongly at the high of the day, which also is the new 10-day high. And now we're back into the summer, and the slope of the 10-period regression line is strongly up. So when we look at the overall results, of the 10-day period, we entered the 10 days, and I'm looking at the RL10 real price. So the RL10 entered the 10 days here, sold off this far, powered north, and is now up here, even higher than the 10-day high. That's kind of interesting. Is the that close was so strong that the RL10 closed outside of the high of the day. That's really a strong indicator for upside continuation. The net intraday move from open to close was 2/3 of the daily movement, and that was a net $2 move from the open all the way to the close. The size of the daily move from the bottom to top was about $6. And interestingly, it's about $6 from the close today to the next technical level, which is the peak of the previous RL10 hump, and the 30-day high is up here at 323.5. And on the way, all it has to do is get through, the RL10 price, the RL9. Neither one of those anybody else but us knows anyway. So nobody sees that as any resistance at all. And in fact, all it's got to do is just kind of maintain that momentum from today, open, and just keep going. That whole region in the green, the distance from the 10-day high now to the 30-day high is nothing but gains and easy movements. And there's only that Z2 statistical level, and then the previous peak, of the RL270 fair value, and then it's really free and clear. So this was a strong finish to a strong week. If we look at this just from the weekly basis, it was a tale of sell off and recovery. So these last 2 days have been pretty decisive. Wednesday was kind of a day in the middle. Thursday was a testing of the courage, so to speak. I suppose if I was going to be fair, we'd say it looked more like this to get more of a flavor of the actual volatility of the week. And this run up here was probably nothing more than that. So this was a decisive move to be able to close at a new 10-day high. That feels pretty good. And now the upside is there. Now, if we think that it's going to open where it closed, we'll just put that yellow dot there to remind us that it's an open question. And so the first green arrow and then the red arrow is the size of today's move. So if we get the size of today's move on Monday, then the natural boundaries would be, as you see, the low of the day today, and then on the upside, it would be the 30-day high. So that feels kind of like a natural operational range. That's the size of the cattle pen. Where I'd be looking to add a second position would be if it violated the Bollinger Band mean. I think I would wait that long before I were to add. That feels like that's like just below the spine of the dragon, and there it goes. And then if it breaks, I think below the previous RL10 bottom, that's where I'd look for a third one. And then that's ready to. Then if it got that far, you'd have 3 positions in hand as it's testing a 10-day low. And then if that 10-day low cracks, man, it's Katie barred the door to the downside. So I think that's about what the upside here will take care of itself. You'll notice the dragon extension is sloping up. That's a good thing. So we just take that dragon extension, slopes up. The RL30 extension, so that's this black line here, the health of the trend. That RL30 extension is up, and then the PSAR is now located here, and so that extension, when we look at the slope of the improvements, that's sort of the maximum sustainable growth rate. So all of those indicators are favorable, and up we go. So just a quick look at what happened today. All right, so we had the S&P at plus 1.18. DIA was a little better at 1.5. The Russell was at 1.76. So all that's very favorable for the U.S. Indices. That, the baseline drummer there, the SPY, had a respectable day, almost a full ATR up. And then the Dow 30 specialty large caps were better, and then the Russell was better. So what else was better? There's Brazil was 1.4, lumber, oil, Google up 2%, Walmart up 2.2, TQs 2.7. I'm looking for TEC. Now this is interesting. This is that, earlier in the week I talked about the difference between the TQs and TECL. So here, those FANG companies, Facebook, Amazon, Apple, Netflix, Google, 2.77. TECL minus 0.1. So just the difference in the way those triple. So there's indexes and then there's indexes, right? That's what I'm trying to say. Know the difference in which ones you're trying to get. This is TECL is like that old school. Microsoft, Apple, Intel, Nvidia, Visa. And TQs have more presence from like the Amazons, Googles, Teslas. Let's see here. The energy sector was a big turnaround play today. Got smashed yesterday. Was a big turnaround today. 3.5. Finance a big turnaround, and this is one of the reasons. I'm trying to remember who asked me that question. Why don't we just need the hybrid frog? No, we don't. Although we could get by with the hybrid frog and the SSC, but I just showed you a method of trading today where you might want to pay attention to these swing trades and which of these sectors are in overbought and oversold conditions. And you might want to know what season they're in. These things that are in daily winter, this whole stack right here, notice that the things that were in the daily fall are all down here. And many of them underperform it. Look at all the ones in the green that underperformed the S&P in that column. And then the ones that were max winners today, you might want to just circle that on your note sheet and make a great big note to self. One of the reasons that I look at that max pain range compression is exactly that reason. Things sold off harshly, but then terminated in a little doji range compression. That represents a significant potential turning point. It's like a compressed spring, and which way is it going to go? Well, fall off the table or spring north. So all these things that dominated today are things that were in the daily winter. So energy and finance, 3.5 and 3.8. Oil exploration, 4.1. There's our friends, Nucor, Devon Energy. Here's Goldman Sachs and JP Morgan. JP Morgan, 5.8. Goldman Sachs, 4.6. So they're much better than even the sector spider. So you could also play that, by the way, with FAS and crush it, because that's a triple leverage finance index. In the same way that UDOW gives you 4.6 when the diamonds give you 1.4, UDOW gives you 4.6. And then there was Wynn, Simon Property Group, Alcoa, X-Ray, Tesla, and Cliff. So three out of the four big winners today were metals. How about that? Nothing wrong with that. So what underperformed the S&P? I'm just going to cut right to the bottom of it and say, hey, the things that got smashed today, ERY, FAZ. So FAZ is that triple inverse finance. Triple energy, minus 7.8. Triple inverse oil, minus 4.4. Inverse materials, 3.6. Nikola Motors, 3%. Virgin Galactic, 1.8. Twitter, minus 1%. And then you can read the rest. There's tech, Microsoft, Mexico. Amazon, Apple, and Facebook in this little cluster. I think what I'm going to do is go through the weekend report tonight so that I don't have to tomorrow night. I will do the hybrid trading Q&A. There's not much on that one. That's going to be at 10 o'clock. I'm going to give those guys a summary of some of the speeches today, and I'm going to probably just have them listen to that first hour so that I don't have to repeat that speech, because I kind of like the way that it sounded for kata number 2. I'm also going to talk with them about this. This was kind of an insight from the discussion we had earlier this week about the manager and that little exercise in the manager, what we want him, what qualities we want to have in our hiring packet. Well, this is another way of looking at that. So this flashcard, 2020-0710, I labeled it the 3v3 Tournament of Champions. You'll see why here in a minute. And this is all about, it's a tournament in which the competition is about exit management. And my bottom line message to you is exit management, just handle it, do your job. That's all it is. It's not mysterious. Handle it, do your job. So I want to draw your attention to this battle circle. Inside the battle circle, decisions get made. Decisions get made inside the battle circle. And I've underlined the word made. They don't just happen. They don't just occur by nature. That is a manufacturing process, a construction process, a cognitive process we go through. And because it's a process, I'm just going to say, you know what? It's just a process. Like every other process that we do, it's just a process, and it can be understood as a process. And if it's a process, then we can map it, meaning we can draw a process diagram of how we do it, and then we can improve it. And then we just move, after we improve it, we just move on, do our job, and we move forward, continuously improving. So that's my spiritual guidance to you. All right. It's not mysterious. There's not some magic beans in here. It's not mysterious. Just do your job. So it feels like a 3v3 tournament, and we're going to take our team in there and we're going to fight these other 3-man teams. And there are some serious contenders in there that are making it hard for us to win. All right. Let's take a look at the other teams in our league, because we're competing in the battle circle against these other styles of exit management. So there's this one really powerful team, and their 3 players are fear, greed, and confusion. So if our team isn't better than fear, greed, and confusion, we're going to lose that game. All right. So our exit management team has got to be better than that combination of fear, greed, and confusion. And confusion is the strongest one in there, because you know how strong fear and greed are, but confusion is when you're in there and you're playing their game and say, should I be afraid right now or should I be greedy? And that indecision is what gets you killed. I mean, there are some bad decisions we make on the basis of fear, and some bad decisions we can make on the basis of greed. And those 2 guys are so powerful that the confusion about knowing which one should be the dominant one makes that a really powerful 3-man team. So they were the champions last year: fear, greed, and confusion. So we gotta watch those guys. Now, an offshoot of that team, same owner, is team fear, uncertainty, and doubt. That was Microsoft's strategy, to create fear, uncertainty, and doubt in the minds of their consumers and the market, so that they would default to Microsoft because they were the biggest. So fear is, he's like a free agent, and they have a player. They've adopted fear as well. Uncertainty is not. It's a special form of confusion, and then doubting yourself. So fear, uncertainty, and doubt is a formidable team. They were the finalists last year. So fear, greed, and confusion won, but fear, uncertainty, and doubt were a close second. Okay, there's some other teams in that league that are going to battle us. There's up, down, and sideways, the different kinds of moves and trends and markets. And when we're playing against them, I said, man, is the way that I'm going to manage my exits, does that have to change to account for up markets, down markets, and sideways? And how complicated are they going to make my rule set? So that is a formidable opponent too. There's these guys, the time travelers, and their 3 players are yesterday, today, and tomorrow. Yesterday worries about back testing. Today gets overcome by all the little things going on that are unique and surprising today to upset us. And then thinking about what it might mean for tomorrow and how should we follow through, and should I exit now or should I wait for tomorrow? These time travelers create a sense of time distortion, time fugue, which can be very difficult to overcome. So that's a pretty good team too. There's no bad teams in our league. And then this last one, a new contender, Their three players are this, that, and the other thing. And these are all the excessive attention to detail and maybe an overcommitment to precision. So our team has to battle 5 different teams at various times. And sometimes they gang up on us. It's a free for all. So this is not a trivial challenge inside the battle circle to make the decisions that we need to make in order to manage our exits. But we're just going to handle it and do our job. And I like our draft choices. And here's why. Because we've offloaded the exit man. We've only rendered this down to what is actually needed for exit management. Like, we're going to offload the entry responsibility to that kid trader. He's just going to put us into positions. I don't even care how or why we got into the position. It could have been an accident. We maybe got short instead of, we thought we were going long. We put the wrong order in and we still got to manage the exit. So it's almost irrelevant. That kid is just going to get us. He drives the bus that takes us to the Coliseum. He's on our team, but he's not out on the floor. He just gets us in. So I'm going to give you the pep talk. I'm going to remember what our purpose is. We're trying to make money for the team so that we can do good things in the world. And that's legit. Don't ever doubt that. And so we're going to be professional about what we do. And we're going to always remember to play with gratitude and forgiveness. These feelings really matter because they're connected. Gratitude, forgiveness, professionalism, being aligned with purpose, those are all the unifying principles of our team. And so the 3 guys that we got playing for us are the fireman, the manager, and the sniper. Those 3 guys is our 3-man team that's going to go up there and win the championship against these other teams. The fireman, the manager, and the sniper are professionally trained and properly prepared. And they don't worry about the entry. Doesn't mean anything. You're in the trade now. What are you going to do? And so they're going to be able to overcome fear, greed, and confusion. Up, down, and sideways markets. Fear, uncertainty, and doubt. This, that, and the other thing. Yesterday, today, and tomorrow. All that stuff, the fireman, the manager, and the sniper are going to win. And then we've got the caretaker, the medic, the team trainer, who's going to 100% get us back into fighting shape after we've gone in there and battled. That fireman is my hero. He's going to take whatever the trader handed him and get us to no lose plus dinner for 2, or not lose more than 1 execution risk. And when he does, he takes that damn chimp with him. The chimp was probably the guy that got us in. And then he's going to hand it off to the manager. And I gave you the long story yesterday about that manager is all business. And he's our point guard and running this thing 80% of the time is our manager. And maybe 20% of the time, maybe 1 trade out of 5, maybe 1 day out of 5, we get called upon to need the services of the sniper to really lock in more of the max gains, where we're trying to get just a little bit more. So maybe that only happens 20% of the time. But no matter what we do, when we come off the floor and at halftime, the doc's going to take care of us 100% of our needs, so that when we start the next game, we're fit to fight. We're ready to go. So I want you to replay that lesson from yesterday and do that exercise about the 7 qualities of the manager that you're going to hire and personify who your icon is going to be for that, and how you're going to lock that in. That's the guy that he's our quarterback, if you will, or point guard. He's the guy that runs it. Okay? So that's what exit management is like. It's a 3v3 tournament of champions. And the game is being played for about exit management. And it's not a difficult game. And all we got to do is just handle our business and do our job. Treat it as a process, continuously improve it. The Wu Wei exit is a perfect example of how to do that. The modifications I made on that to apply to Kata 2, same principles. So I like our team. I like our chances in battling these other three-man teams that are trying to upset our management process. And they're not going to win. We are. Okay. So that's what I want to say about that. All right. Let me power on through the weekend report. Oops, one too many. There we go. Okay. So, bullish normal conditions. That's good. Overbought on everything except the 30-day look back period, but we're close at 78. It's only got to be at 80. I should need to add that to the, so you know what the threshold is. 80 is the threshold. From 50 to 80, you're in that middle range. Bullish normal, we're 5% above the 200-day moving average. ADX still is a very weak 10, but the bulls are starting to win. It went, the MACD histogram went to summer today. Risk Z is signaling risk on at with a Z score of 0.12, and you can see how that's been improving, pointing the way north last 6 or 7 days. Still very good holdings for all of July. I like those choices. And then these are the winners in that effort. Emerging markets are making a surprisingly strong move. And I think it's because they're handling COVID better than we are, and they don't have an idiot for a president to contend with. They have their own problems. You know, the emerging markets have 99 problems, but Donald Trump isn't one of them. Let's see, Dow 30 current leaders. Yep. Apple, Microsoft, Goldman. Theoretical exposure is 100%. In the monthly market health check, the month of July is moving out nicely. It's looking pretty good. I wonder if I can work this up. That would be so amazing. Oh, that's what that noise was. I dropped the digital pen. Aha. I'm going to work on that later. I know there's a way I can put a pen on Adobe or on PDFs. I just haven't played with that on this one. I don't know if I want to mess around with that right now. Ooh, stamps and shapes. That could be cool. That didn't work. Okay. Yeah, there we go. So a nice move so far this month in June or in July. It's closed above the dragon. The RL10 has rolled from summer, fall back into summer. The slope of the dragon is up. The dragon held support. The PSAR is about to flip. And now the next level is about 325 is in. If it can get above 325, this thing is free and clear. Downside, we're going to see support at the monthly low at 310 and the 2-month low in the southern skin of the dragon at about 298. Looks strong. Belly of the dragon at 290. Bollinger Band mean at 288. And then 3-month low, Z1, Z2, fair value. On the weekly, I like that the PSAR is rolling up. The dragon belly at about 260. The dragon spine has been strong support for the last 5 weeks. And really the Bollinger Band mean held pretty strong at 300. And now the skin of the dragon is holding pretty well here at 310. And it powered above and closed above last week's high. That's a very favorable move. And now the next targets are the 5-week high here at about 320. So we get through 320, 321, then it's free and clear to 330. And just, this is the point to study right here. $325. Then if that holds, then it closes the gap pretty nicely to here. So if it can get through there, it goes north pretty quick. It'll go pretty quick. That move in between those two lines will happen fast because it's closing the gap. This little cluster in here has been tough sledding to get through. The chop of the last 5 or 6 weeks are the times that would try men's souls. But then so it was right here. And then when it did move, it really moved. So those are the 3 congestion areas, if I can say it that way. And when those broke, look how quickly they moved. This move from here to here was fast. From here to here was fast. And now we want to see this thing move fast to there. Okay. We've already seen the daily at length. The 30-minute. This little cluster, it resolved to the upside, and now it's ready to go. So when these little turning points occur, it behooves us to watch that. Man, if I was professional, I could then just add that note right there in that little square, just annotate it. If it did speech to text, this could be awesome. Maybe next week. So it had a nice controlled close, and it was above this cluster. So I like the way it closed. And now there's this big gap that's going to fill. Yeah. Once that goes, it's up into here. And if it can get above 322, like I said, it's off and running. Oh, is this going to be nice? It needs to have a pen. Oh, well, what are you going to do? All right, ETF 13 portfolio, the Qs, and emerging markets. That was the big news. Treasuries had their moment at a nice little recovery as the alternate. That's just a reminder that this is a two-way market, and that if it starts failing, there's people building that position already. But notice that real estate is just nowhere to be seen because nobody believes that anybody's going to have enough money to keep paying their notes, whether that's the mortgage or the rent. And what that means is all those property values are going to have to get marked down when guys go bankrupt. They're going to get 20 or 30 cents on the dollar so that these guys that come in with the Fed money and buy them out at fire sale, that's the other shoe that's going to drop. The next big wealth transfer is from small and mid cap property ownership that don't have access to Fed money and they can't meet their note obligations and they have to sell at a fire sale. And these guys in the large caps and banks come in with all that Fed money and buy it dirt cheap. That's the next transfer. So that's why I'm still interested in Simon Property Group in both directions. Here's the big winners. Again, you can see Treasuries back in the middle of the pack, but staking out their claim for defense. The diamonds have started to suffer because they have a considerable number of non-tech, but also have some financials, whereas the Qs don't. So while they were leading the way, they're now not leading the way. The day of the Dow is over, I think. Here's my two stalking horses for those one-day pops like we saw today. Even with those one-day pops, look how crappy the energy sector is. Materials still holding up pretty well in the long run, but the shorter run, there's lagging. ETF 32, the same things that we're holding in the ETF 2 portfolio. Wheaton, Clean Energy, Tech. Man, crushing it, man. That's those monthly holdings. Oil exploration is part of that sell-off in energy and food prices. And again, you can see where Treasury stacked up longer term, lower middle of the pack, but as the reality of a potential top looms, that's the indicator there. Dow 30, Walmart's big day, but otherwise, dude, the big five, especially these two guys. U.S. Steel had a one-day good day today, so there's still more room to recover. I should be doing more somehow, getting more out of the Walgreens. I haven't really given enough attention. I think there's something in there. Nice. I would look at NVIDIA now more than Intel in this space. I want you to notice that most of the losers were still losers, and all the winners have been doing pretty well. So relative strength in this model is important. ETF Max, I'll just leave that for your reference. The first thing I look at is over here. It's US Tech, it's the Qs. Silver and gold. Global Tech. Global Discretionary, still hanging in there pretty well. Tech and discretionary on the upside. Energy and financials getting smashed. And then in the world of strength down here, finally treasuries have come back and given, a fair shake, and gold is starting to come on. Real estate, the real laggard at 40. These right here, all the winners keep winning. Taiwan is green and white, and so is silver. So I look at that's green and white because what was good is now great, and we can exploit new strength, and you can turbo those intraday. And again, I play that with Wheaton. A dark horse would be India in here because it is white and green. White and yellow. It was weak, now good, and we may be able to exploit new strength. And it just got above the middle of the pack. So there is some new momentum of interest. That's what white and yellow equates to. Was weak, is now good. Green and white was good, and now is great. Was good, now great. While we're here. Gold miners and energy, very liquid, very volatile. Same with Brazil. Russell's pretty good. Finance, very good. Biotech. So that's the tradables. The big chart, and then we're just going to go look at the bottom stack here. This is important. XLE energy is red and yellow, so that's going the wrong way. It was bad, now is horrible. That's how we read that. And then REITs and energies or utilities are same condition. XOP is also getting worse. It's yellow this week, was white. Those are all signs of impending weakness. Some impending strength, Europeans and international equities. EFA is a nice way to start playing The first world large caps, if the U.S. starts weakening because of shenanigans, EFA is now becoming legit. And Brazil, yellow and red, is actually a big improvement as well. Risk Z is in good shape. I like my Max Paynes. I just noticed who did well this week. I mean, seriously, that may be enough. Just a handful of dojis over here. This is a warning that the goodness in Disney could turn to weakness because it's overheated. Only a handful of auto framers, better than 2-to-1. Nobody fired on the breakout plays. In the ETFs, just a handful of dojis. So here's Mexico, and he's number 3 on the max pain range compression. Yeah, that's all there is. The big relative strength leaders here, I'm going to include Apple and silver. Super pinch candidates in here. There's Microsoft is getting pinchy, and Apple, sort of a consolidation zone. So I would watch for renewed interest in those. I like energy in here at 2-to-1. And it suggests using about $1.50. 1.38 would be the is 1 ATR. So that's the risk suggested. Oops, sorry. Bottom shelf, these are the ones that are maybe overheated, but the furthest in front of their own RL270. These are the deep discounted plays here. This is financials. Daily squeezes. This is a long range to the 10-day high and divided by today's range stat, or today's range, to come up with the reward to risk ratio. Some things that I would notice in here: healthcare in Apple, Microsoft, Cisco, pretty good. All of them better than 2-to-1, and the reference data gives you all the that you need for auto framing the trade. These top level guys in the spring, and then these strong summers. Now that the RL10's back in the summer, those are the leaders. And these laggards here, though, deep in the winter, just horrible. Those are the oversold conditions, and maybe they have the most to recover. I look at the 10 days, so here's the That's really good breakout moves here in these guys and in these guys here. I would also notice this right in here because of the 3-day breakout. But you see how bad Mexico has been on every dimension. Quite a bit of difference between Mexico and Brazil in the Monroe Doctrine trade. These two numbers, because they're so big, jump out at me, so that tells me go study Intel and U.S. Steel quite a bit. It's been tough the last 30 days. Hadn't been much follow through. Imagine how much easier it's going to be with the supported spring crossings when we start getting large directional moves. I'm noticing that we're right at the long-term slope stat average. We're at the long-term average for price relative to the 200. It's stable. The slope of the RL90 or of the 30 has come right back here. Right back in the middle of the chop in terms of slope stat. We're back to a normal calculating market right now. That's what all of this is saying. This is interesting, the difference between the RL90, which is powering up and just starting to roll over, while the RL30's slope stat has come all the way back to basics, and the RL10 is getting ready to peak. So it would not surprise me to see some profit taking and testing early next week, because that's a pretty good condition right there for the RL10 and the RL90. That's as high as it's gotten, except for a few brief moments, and after getting to that level and rolling over, there was a sharp sell-off, for 3 to 5 days in here, a couple times. So that's something to be cautious of as we hover right around the upper shore. And it's really got to get above that level. 322. We know that to be true. Then it gets up to here. That's the resistance. That's the ceiling we got to break through, or it's more of this choppy crap. And we're running out of time because that election's coming. Huge economic implications in the policy differences between those two nitwits. All right, that's everything I want to cover for the daily and the weekend report. And I'll do the question and answer tomorrow. I will not do one tomorrow night. I'm taking tomorrow night off. You can be framing these trades. And Sunday, I will do the 8 o'clock Sunday spiel will be on evaluating your trade frames that are posted in the chat room. And then I'm going to work on kata number 2, I think, tomorrow. And I will probably show some of those trades. If I decide to do a recorded presentation tomorrow, you don't have to wait for me to do that. All I'm going to do is I'll record something, put it on YouTube, and then put the link into Patreon so you can watch it at your leisure. But it's really going to be, I'll probably take 5 symbols and do a kata 2 framing on them so you can see what that looks like. Okay? All right, that's everything I got, guys. Take good care. We will see you tomorrow morning, some of you, and otherwise Sunday night. And then back at it again on Monday. It's just another day at work, man. Take good care.